The broadcast is now starting. All attendees are in listen-only mode.
Good morning, good afternoon, everybody. Welcome to our free webinar on the long-term cycles of gold. I hope all of you are doing great. Thank you for joining me today. Let's just wait for a couple of minutes to allow everybody to join us. Some people could still be in the process of logging in. And if somebody could please confirm about audio and video, if you guys can hear me properly and see my screen, please, that would be great. All right. Hello, Greg. Hi, Augustine. Hi, Batchman. Thank you very much, everybody, for the confirmation. Thank you, Greg. Thanks, Lucas. Thanks a lot. I hope all of you doing great. And thanks, like I said, for joining me. Just let's give it a couple of minutes. Wait for everyone to join us, and then we'll get started here. All right, we're going to wait for one more minute and then we get started. And of course, I do understand some people might join late, but the session will be recorded. In case your connection breaks or you're not able to attend the entire session for any reason, I do recommend that you stay here till the end. That way, you would be able to interact with me and also be able to ask questions towards the end once I've gone through my presentation. So that definitely that's going to be more beneficial. But if for whatever reason you're not able to watch the entire presentation or the webinar, a recording will be made available once the seminar has ended. So we will get started here. Welcome everyone once again to our free webinar about gold. It is going to be about the long-term cycles of gold. We have recently seen new all-time high against major currencies, gold breaking to new all-time highs against most major currencies. And the question is, will gold USD follow the same path and go on to make a new all-time high? So that is what we are going to try and conclude by taking a look at the correlation chart or the overlay of gold with the other major currencies. I am also gonna give you the long-term picture of gold versus other major currencies, so you guys will get an idea of because we are this is an international market, and we have obviously people joining us from different countries in the world. So you will be able to get an idea of where gold is headed in your local currency. Of course, talking about the few major currencies over the coming years and so on. So you will get an idea about the long-term path and the structure of gold against the major currencies. All right, and it's presented by well, my name is Daud Bhatti, and I'm a partner here at EliteWave-Forecast.com with Eric and a senior analyst. Okay, and today obviously is 26th of September and 12:30 p.m. was the starting time. Okay, so we'll get started here. First of all, just a brief background of who we are, what we do. I do understand that we will have some members also joining us, and some of you would have attended. Okay, so as I said, that there would be some of you would have attended webinars in the past, even if you're not a member, and some of you would know us through different social media outlets like StockTwits, Twitter, and so on, or have had interaction with us in the past. But there will be some new people joining us today as well for the first time who do not know who we are. So just a brief introduction of what EliteWave-Forecast.com is. EWF, is in short is a team of technical analysts with varied backgrounds in finance and science, and has been in business since 2005, so nearly 14 years. It's going to be 15 years soon, with the grace of God. And after many successful years of applying the Elliott Wave principle to trading with real capital, we found the principle becoming increasingly more subjective, creating false patterns within the rules of classic wave analysis. The rise of machine-based trading seemed to exacerbate the observation, and that while wave theory still had its merits, there was a new code to the behavior of the markets. Quite simply, a trader needed more tools to combine with the classical tenets that the Ralph Nelson Elliott modeled back in the 1930s. Rather than giving up on the principle, a lot of time and resources were spent building these tools to help model an analytical process that included not only the wave theory, but also swing and sequence analysis. That is something that we concentrate on a lot. It helps us, avoid the traps in the market. Uh, okay, cycle and correlation analysis, again another integral part of what we do, and our forecasts. Okay, we do pay a lot of attention to the cycles, and we also do a lot of correlation as well, because we believe in the one market concept. Because you would hear many traders saying that I only trade gold, or I only trade crude oil, or I only trade E-mini S&P, or I only trade the euro, and I don't look at other instruments, and I don't need to look at other instruments. So those traders are kind of trading in isolation, and they're not really looking at the broader picture of the market, which even though the euro could have like the perfect setup, like maybe looking like an impulse, but then the dollar could not be supporting that, and then there are there's correlation between the different groups as well. So we basically combine everything. We look at everything. We cover 78 instruments altogether, including forex, commodities, indices, stocks, bonds. Even we cover the Bitcoin. And besides that, we are always looking at more instruments as well, to try and gain an edge in the market, because like we say, it is one market concept that we follow, which means that it is not, you cannot forecast and trade instruments, or be it forex, an index, a commodity, or a stock, in isolation. All right, so we do pay a lot of attention to correlation, and there are two types of um, correlation. One is the first dimension, the other one is second dimension. Of course, it's a deep topic, but we do look at that, but not always it's going to be direct correlation. Sometimes people can get confused thinking that, okay, these two instruments are not correlated. uh, okay, no, just bear with me for a moment, please. All right. So, one correlation is the direct correlation that you can see. Just give you a brief background on that, and the other one is where you will see the two instruments apparently moving in different directions, but they would be correlated in the swings and not in the direction. So it's like, when one instrument rallies, the other one could rally less, and when the other one pulls back, then the one which rallied less, it goes on to make new lows. So it might seem like one is going higher and the other is going lower, and they're actually moving in opposite directions. But like I said, if you then downgrade and then pay closer attention to the swings, and then you will realize that they are correlated in the swings, that when one rallies, the other one rallies, but even though with a much lesser magnitude. And similarly, when one drops, the other one can drop more than that. So it might look like they're moving in different directions, but they would be correlated in the swing. So that is what we call second dimension correlation. It also forms an integral part of our analysis. We do pay a lot of attention to that. Okay. All right. So you guys can hear me, right? Just I see somebody mentioning that they're not able to hear me, so I just wanna get the confirmation one more time. I know I got the confirmation earlier, so no problems with the audio. Okay, that's great. Thank you very much, everybody. Just wanted to make sure of that, because someone mentioned they couldn't hear me, so it must be their end. Thanks, everyone. So if you're having audio troubles, I recommend that you check your speaker settings or headphone settings, or try to restart the session, because everybody else is saying that the audio is working perfectly fine on their ends. Okay. Okay, so as I said, then we obviously look at our proprietary, as well as proprietary trading with the right side analysis. Again, this is something which is the heart and soul of what we do. The right side is really what we focus on. I mean, as I said, we use the Elliott wave theory, we use the swings and sequence analysis, we use the cycles, we use the correlation, but at the end of the day, we are using all these tools to try and identify the right side of the market. So that is the most important thing that we focus on, because we believe that being able to identify the right side, that means, okay, once you've identified the right side, now that is the side that you need to trade. So, let's say if it is a bullish side, then you need to trade on the long side. But that does not obviously mean that you just, every morning you wake up, you open your trading platform, and if we said that the right side in gold is up, it's bullish, and then that's it, you go and straight away buy it. Obviously, it's a system, and that's why it's called the right side analysis. We have developed a system, so it consists of the blue boxes, and when we combine them with the right side tags, basically that gives you, that tells you which side of the market you should be trading and which side you should not be trading. Let me just quickly grab, in fact, share an article with you guys, which I think is going to help you a lot, for those who are not aware of it. So you can read that in your free time, or even scroll through it, during the webinar, just to get an idea of what I'm exactly this right side system is. Just bear with me for a moment. Let me grab that link for you guys. All right, sorry about that. I'm going to post this article's link here, because since I was referring to the right side system, so this, you guys can read this article, of course. I understand some of you will already be aware of it, especially if the members are here, or if you have been following us in the social media or checking our blogs and stuff. But for those of you who do not have an idea, or if you want to want to refresh your memory, you can read this article. I believe it's going to help, and it will help you not just in this webinar. In fact, I believe it's going to prove very helpful to you in your trading as well, even after this webinar has ended. All right, so that's who we are. Okay, that was just a brief background of what we do. And sorry, I do see a question here from Tian Wong. Okay. Well, that's basically a very general question there. And first of all, I want to mention that if you guys have any questions, please make a note of them either on your notepad or write it down. We will take questions at the end. So, I will certainly give you guys a chance, all the audience, to be able to ask questions. Otherwise, of course, we're going to break the rhythm. When we are discussing wave counts or looking at the long-term wave count, yes, if you have any question there, you can certainly ask. Otherwise, I would appreciate if we could do the questions and answers at the end. And we will be taking questions related to the webinar, because otherwise, if we start basically going into other fields, it's a massive field. Elliott wave itself, there are like a lot of things you can talk about. And Tian, if you have a question about how to count waves in monthly or weekly chart, and how to know label which degree wave, okay, I mean, that's like so something which is not covered in today's seminar. It's it's not under today's seminar scope, because if you start talking about that, then I might just keep explaining or talking about that for another 30-40 minutes, which obviously is not on today's agenda. So if you have any generalized questions, I would recommend we do have a free webinar about how to read and label charts at our website. So you can certainly check that out by browsing our website, or you can of course go to our support as well, the green chat now button at our website, and then they can help you find that link. All right. So I would appreciate that if you could only keep the questions related to the webinar. All right. Whatever we'll be discussing here today, so that of course, if so many people have come here wanting to hear about gold, of course, then it's not really fair that if you start talking about generalized things and not really cover what we were supposed to cover in the webinar. All right. Or in the end up being short of time and not being able to cover everything. All right. So thank you for understanding, Wong. Okay. So like I said, now let's move on. And uh, now the next, basically, like I said, the main topic, as it says, it is gold versus the major currencies. So what we will be looking at in this section is, first of all, we're going to take a look at the overlay of gold with most major currencies. Of course, it doesn't mean it's going to be every currency in the world. It is going to be the major currencies. We're going to take a look at the long-term wave counts of gold versus the majors. Now, by long-term, I mean because since we do want to cover the most major currencies here, so of course we will not be able to go deep or all the way down to the 1 hour time frame or even the 4 hour or daily. So this is the long-term picture that I will be giving you. All right. Of course, that is going to give you an idea of and of course I will mention and I will let you guys know what we think could be the next good swing buying opportunity. And we're going to take a look at the silver cycle, which is XAG USD, and we are also going to take a look at the GCC Wisdom Tree Commodity Index. Okay, so once we have done that, in the next section, we're going to take a look at the weekly and the daily wave counts of gold versus US dollar, because remember, the question today that we are trying to answer is that following the break of gold to new all-time highs against most major currencies, will gold USD be able to do the same? Okay, so that is the question that we're trying to answer, and we're going to present our opinion to you guys on that, and then we can look at some trading opportunities in gold. All right, and then of course there will be price projections at the end if it does go on to break the high. That's going to form the part of our conclusion. All right, so now back to this section here, we're going to take a look at some charts now. First of all, like I said, we will take a look at the overlay of gold against the majors. So let's open eSignal here so we can open the chart. All right, so this is the overlay here. Just bear with me, please. All right, so here we can see this is basically uh, the overlay of gold versus the different major currencies. I know the lines look jumbled up, but this is the 2011 peak for reference, and that is the peak in gold as well. Gold USD I'm referring to. So 2011 was the peak before we got that massive correction in gold. Now. So there are different lines here, different colored lines, as you can see. So first of all, okay, so we have in blue, this is gold JPY, all right. Then in black, we have gold against the Canadian dollar. Also, you can see it has made a new all-time high because this is the previous peak in the black. This is the previous peak in blue. We got a new all-time high. In purple, we have gold versus the Australian dollar. This is the 2011 peak you can see for reference. And the purple line is trading somewhere over here. So it has clearly broken above the 2011 peak. In green, we have gold against the British pound. This is the 2011 peak in the green line, and you can see that it has broken that peak there already. And then in the red color, we have gold versus the euro. This is the peak. The euro actually saw the peak in 2012 because it made a marginal new high in 2012 following the peak in 2011 before the pullback. But now this is the red line over here, and it has, you can see, broken above the previous peak. So you can see that there's obviously a series of higher highs. You know that that's an uptrend, and this clearly tells us that the gold is bullish against the most major currencies, at least the ones which are listed here, namely the Japanese yen, Canadian dollar, Aussie dollar, British pound, and the euro. Okay, so when we have seen the break of gold to new all-time highs against these major currencies, most of them, obviously, you know, all right, so that begs the question whether we should be expecting gold versus the USD to do the same. I mean, that's obviously, you know, a gold USD is the most popular, uh, but you know, rarely you will see like people discussing or talking about gold versus other major currencies. But like I said, as I mentioned when we were covering who we are, that we are always looking at other instruments that some, you know, even like going beyond the ones that we do not cover in the regular service to try and get an edge in the market, because you know we always try to keep our clients on the right side, and this is one of the things that we do in order to be able to keep our clients on the right side. We are always looking at other instruments to try and get an edge in the market, because as you guys know, this is all one market, and as I mentioned that we do follow the one market concept. Okay, so since we have seen the break to new all-time highs in gold, so that's basically, you know, it begs the question whether we can expect the gold USD to do the same. So obviously that is the question, as I mentioned, we will be trying to answer in today's webinar, and at least we will, you know, make a case about what we think, whether it should be able to follow the break higher or not. Okay, now next up we will be looking at the long-term wave counts, just to give you guys an idea of gold versus the majors. Okay, and we will be taking a look here. We have gold against the Aussie dollar, Canadian dollar, euro, pound, and the Japanese yen. Now, Aussie one has a fake spike in it. Okay, that's to do with the data provider. Just makes the chart look a little bit ugly. Okay, let's just wait for these charts to finish opening, and then we will take a look at them one by one. All right, so first of all, let's take a look here. This is gold versus the British pound. Okay, so you can see that we're going to give you the long-term targets as well. Now, uh, over here you can see that this is the cycle. The data here comes only from 2008. Okay, this is, you know, this appears to be 1 2 3 4 5. All right, then followed by a pullback, and then we have a new high, just like we saw on that overlay of the line chart, you know, where we saw that lines had broken above their 2011 peaks, or 2012 in the case of the euro. All right, now same peak as the gold USD. Okay, this is your 2008 low, this is the 2015 low, this is 2018 low. Since we have broken this peak, obviously your natural next extension target is going to be the 100% extension. There are two different extensions that we will be looking at. They're both marked on the chart, and I will explain what is the difference. So currently this blue box that you see here, it tells you that the pound, the gold versus the British pound, has already reached the 100% extension from this 2015 low. So this is, and that is the reason why it is pulling back, as you can see. Okay, so that's where the pullback is coming from. Now, if you drop down to the weekly or the daily, you will see that the rally from here, you know, you can, I mean, count the one completed here, but it will look better with another high. But you need to be aware that this is like nearly a 4-year long cycle, which is already at an extreme area, which means that if you talk about the next, you know, investment opportunity, or like, you know, long term buying opportunity, that's obviously going to be this wave 2 pullback over here. Now, if you downgrade, you will be, you might, obviously we could find an extreme area. Like I said, we're not going to dig into that in every instrument, but we will look at that possible extreme in gold USD when we get to that section. So I will let you guys know that if gold USD makes another low, then which area, what is the area where we can find buyers in gold, and from where you can either make a new high or bounce in 3 waves at least. All right. So at this stage, yes, we can see another high, but we need to be aware that we are already at equal legs from this 2015 low. We're going with the idea of the bullish nest here, okay? And because since if it's an impulse, so that you gotta go with that view, right? And the next pullback, we believe, either after another high or after retest of the highs or some consolidation below the peak, we will at least correct this cycle, and then that should present the next, like I said, swing buying opportunity. Okay. The next target on the upside is going to be the 100% extension from the 2008 low, which is this low over here, and that's going to take you to 1458 to 1641.94 area. Okay, obviously the wave count would run something like this. If it is indeed going to nest, then you can play out something like this: 3, 4, 5, and then you get another 4 and a 5, and you reach this area. What is this area? This, as it says, it is the target area from the zero line. Okay, now obviously, like I said, the data from in here, it only comes from 2008. Okay, but you know at one stage, obviously gold was hardly worth anything, right? So if you go and measure from the zero line, then that is your target there from zero, and eventually we believe that is going to be the long term target for the pounder. So you can say it has a long way to go. Okay, and the next area of interest when we see after this pullback is going to be 1458, 1641. It does not have to stop there, because if it is a wave 3, it can go past that area easily without any problems. And that is just to give you an indication of where the extreme area or the equal legs area up from the 2008 low related to 2015 low comes. Okay, does not mean that you can sell there, because there is, this is a bullish sequence. There is no, there is no reason to sell. The right side is up because, as you can see clearly. Okay, eventually we will be looking for 1877, 2158 area in gold against the British pound. Okay, now next up, if we take a look here, you can put these levels or the labels. So this is one way. Obviously, the other is that it can do a 4 and a 5 and then finish red 1, then make a larger pullback in wave 2, right? So that's obviously can happen, but the key here is that the sequence is bullish. Okay, the right side is up, cycles are bullish, and that means it is a buy in the dips. Obviously, we are at the 4-year long cycle equal legs, so yes, another high can happen here, but soon a healthy correction will take place, which should present yet another good swing buying opportunity. And of course, it's not a sell even when a bigger pullback can start. All right, so this could be 1 as well instead of B. Okay, but the key is that the minimum that you should be looking at that, and of course if you do get there, then this could be your 1 also instead of B, A, my bad, and this could be B or 2 as well. All right, and then this can be your C or 3, and so on. So that's the long-term view, okay, like I said, of gold against the British pound. Now we can take a look at gold against euro. Very similar structure here. Also the data starts from 2008 in e-signal, obviously. uh, you know and it has also made a new all-time high above this 2012. This is the 2011 peak in gold. Okay, and of course we have broken above this 2012 peak, and also euro, gold versus euro has also reached the equal leg, this time from 2013 low. This was the low in gold pound, the one in 2015, but this one is also at an extreme area over here. Okay, now this one also, if you downgrade the chart, let's say if you go to the weekly chart, and you will see that it looks like three waves from here. Okay, 1, 2, and 3. Now this could be your wave 4, and you can make a new high, or you can do another leg lower and then do wave 5 up. That's because this looks like one cycle here, so it does certainly look like a three-wave rally from here so far. Okay, so if it's an impulse, then you will be looking for another leg up, which can, of course, it can make a new high from here, or you can make another push lower and then turn up. This is just to show you guys an idea of why we are still showing another high within the blue box. That's the reason, because the rally from here appears to be in three waves still. All right, so from here we can see a pullback then after another high, and then this can provide the next good swing buying opportunity, looking for a target of minimum 1716 to 1918. So if you are in Europe and if you want to buy gold jewelry for your wives or girlfriends, then I think the best time would be to wait for this dip to happen, and that's when you can get a better value for your money. Of course, eventually I do it will go up even if you bought it now, but I believe this area here, it can be the perfect timing, obviously, to buy gold for trading or in long-term investment purposes, or if you just want to buy some expensive jewelry for your wives or girlfriends. I think that's going to be the perfect time to do that. All right, so that's so just keep an eye on that. Okay, then this is going to be your next target area there. We have the equal legs from the 2008 low. Okay, that's going to be your 100% extension from 2008 low. That's going to be the next intermediate target, and then you will have the target from the zero line coming over here between 2248 to 2577. That, I believe, is going to be the eventual target. All right, so you can see there's a long way to go here. Okay, and it is a buy in the dips. Of course, you need to be aware that you are at the 100% extension of the initial rally from the 2013 low. So yes, we can see another high, but after that, we should at least correct the cycle from 2018 low. Okay, and then go up like that. Or another path can be that, as I mentioned in the case of the pound as well, that it could do a 4, 5, and then do this before turning up. Okay, so it's going to be one or the other, but that's, you guys get the idea that with the break of this high, you have a bullish sequence. It is bullish against this low, and in the first degree against 2018 low, second degree against 2013 low, and we need to keep pushing higher. Of course, we believe that a healthy correction will take place soon, even though in the 4-hour time frame we can still see one more high, and in the 1 hour, a double correction to the downside from this peak still can take place. Okay, now next up we have gold versus the Canadian dollar. Pretty much the same count here as well. Okay, it is at the equal legs from this 2013 low, very similar to what we have in the euro. Gold euro, it's reaching equal legs from 2013 low, and gold versus Canadian dollar is doing the same. Okay, well, in fact, this one has missed the equal legs by a very small margin so far, unlike the gold versus the euro, which already reached the area. And this one, same idea, that the rally from here, it can, it will look better as a 5-wave move with another high, but of course, remember, you are reaching equal legs from 2013 low. Nearly a 6 years long cycle is reaching the extreme area, so which means that at this stage, unless of course you are looking for short-term move, for that also, if you were to buy, you need to wait for a clear extreme from here to happen. And as I said, that we will discuss that case in the case of gold USD later on, not for every instrument, but then I think next good swing buying here is going to be this pullback, which takes place when we correct the cycle. And of course, another possibility can be that it can do a 4 and a 5 here. 1, 2, 3, 4, 5, and then we do this before higher again. And the target from the zero line is going to be the 31.42 to 35.92, and again, a long way to go before we reach that target. All right, now that's what we got in gold versus the Canadian dollar. Next up, we have this is well, in fact, first of all, let's take a look here against the yen. Okay, and then we cover the Aussie. This is dollar yen. This is the 1999 low, of course. We have more data in this one. We can assume this. This is your wave 1 coming from the zero line here. Okay. And then you have a 2. This is your 3. Now this dip, obviously, I mean, it's difficult to call this like a 1 and a 2 or A and B, even though it can be, but the pullback here isn't deep enough, okay? So that's the reason why we're going with the 5-wave idea and calling this to be wave 5 in the dollar yen. An alternate view would be that, of course, if you start from here, then you call this your a B, and then you make it like the rest when this is in wave CO3 starting, okay? But if you take a look here, I mean, even the stochastics, this one doesn't tell you much, okay? But the pullback here wasn't that big as compared to, for example, in the pound, you can see it's clearly a connector of this cycle. Same with the gold euro, same with the Canadian dollar. In the case of the dollar yen, it does look to be quite short in time and price, okay, to be the correction of this entire cycle. So we are presenting it like this: 1, 2, 3, 4. Wave 3 here ended between 261.8 to 323.6 extension. If you assume that your wave 1 was from 0 to this peak here, and then that's going to give you those extension levels that you are seeing on the charts right now. Okay, so that's where wave 3 ended. Of course, after a pullback, this is the peak in 2013, and you can see that the gold against even the dollar yen has gone on to make a new high, okay, which hasn't been the weakest of the currencies lately, but still that shows how strong gold is, and it is another major currency against which we have got a new all-time high in gold. Now, so if this is a wave 5, then the eventual target here for this wave 5 is going to be this 0.618 to 0.764 extension of wave 1 plus 3. Okay, so if we go from 0 to the peak of wave 3 and project it higher from here, and then your 0.618, 0.764 extension area, this is what you're going to get. That is the target for wave 5. Normally, uh, when you obviously, since we're expecting more upside, a lot more upside still in the gold versus the euro, the pound, the Canadian dollar, etc., so we will expect more extension here in gold against the yen as well, and it could be extending higher like this. Okay, it could be one. This is the 2018 low in the others. Now this doesn't have, obviously, this appears to be a nest here. So one way is that it's gonna basically extend like this. All right, and the other one is that you're gonna do like a 4 and a 5 to finish this cycle, then make a 3-wave pullback and then continue higher. All right. Okay, JMR, at this stage, what time is the entry point? Of course, I cannot give you the exact timing there, obviously, because that is the most difficult part of forecasting, the time. But you will see clearly that the market needs to show you, not on this time frame, but let's say if you went to the, if we talk about this, okay, so you go to the daily or the weekly time frame, you need to see a clear confirmation that this cycle ended and a clear cut 3-wave pullback developing, and then you buy in 3, 7 or 11 swings, okay. So like I said, they say that in an uptrend buy the dips. So at the moment, yeah, I know that we are like a few dollars below the peak, but it's not really, you're not really getting a bargain if you're buying it at the highs of a 4-year long cycle in the case of the gold pound, 6-year long cycle in the case of the gold euro, and if you take a look here, the dollar yen, this is also at equal legs here. All right, or the 100% extension since the 2013 low against 2016 low. So for investment purposes, I mean, it is not the right timing or a smart move to be investing at current levels. So in order to get the advantage, you should wait for a pullback and buy that, because you, like I said, you are at extreme areas either from 2016 low or 2015 low when you talk about the pound, and Aussie dollar even is already at the extreme area from the 2008 low. Okay, so That's the reason why for I mean, like I said, everybody needs to have their own strategy, but I do believe that the right timing would be letting the pullback develop and then waiting for when this cycle ends. All right, then you wait for the pullback, here to buy. Not at current level, definitely not from an investing standpoint. Yes, if you are like say short-term, mid-term trader. There could be a buying opportunity if we get more weakness in gold. I'm gonna, I will look at some levels for that when we go to the gold chart. Of course, we won't have enough time to look into those details for each one of them. But for investment purposes, definitely, I believe that now is not going to be the right time to be jumping into the market. All right. So this is the dollar yen, which is also already at the equal legs area here. Just one moment, please. Okay, so well, you're most welcome, JMR. Actually, this is Dawood. Actually, I know it might say Eric talking. Eric is our founder and CEO, but I'm conducting the webinar. Okay, so we are here at equal legs from this low, 2013 low in the dollar yen as well, as you can see. So again, this area should produce a pullback. As I said, it could, there's a higher low here, so it can do like 4 or 5 before doing this. But this one also, even though I think it will be better buy. I mean, the gold will be better buy against other currencies, because I believe now this is where the multi-market correlation comes into play. Okay, now we have if I show you the chart of, let's say, the dollar yen, I'm just going to briefly show it to you. Okay, this is the quarterly chart. We're going to go to the weekly now. No, this doesn't help. Just bear with me for a moment. Okay, so this is the chart of the dollar yen, and this is the peak here that we got back in 2016. Now you will see that dollar yen itself has an incomplete sequence, because this low is 104.56 and this one is 104.45, so you have a lower low here. Okay, and now this is actually the dollar going down. Remember, this is USD JPY, which means that when the USD JPY trades lower, USD is getting weaker and yen is getting stronger. All right, so but due to this incomplete sequence here, I believe that the yen is not going to be too weak. Okay, and then similarly there are other a lot of other yen crosses as well. And now if on this chart we take a look here at the Aussie yen, for example. Okay, so you can see that from this peak of 2013 you have 1 2 3 4 5 swings in complete sequence. So what is it telling you? That yen, yes, soon a big bounce here can take place. Okay, after another low or not, that's again, like I said, that's not the topic of today's webinar. But 5 swings means that yen will be stronger than Aussie until it does not complete 7 swings from here, and same thing over here, that we have an incomplete sequence from here. So this tells me that this is again, as we said, that we look at everything and then determine which instrument is going to be the best one to trade. So I do believe that the better buys, it will be better to buy gold against other currencies, not against the yen. Yes, there will be a period when gold will outperform against the yen as compared to other currencies, and that's going to be the time when we get this bounce here, okay, in the yen crosses and so on. But after that, the yen will be strong again, and then it will, the ideal time or the ideal instruments would be, the trades would be to buy gold against other currencies, not against the yen. Okay, so but this one should also remain supported. Of course, if you see a clear setup, you can trade that. If you live in Japan, you can still buy gold, but you have to obviously, like I said, wait for a pullback. You as we are reaching the equal legs from this low here, so it doesn't mean that you cannot buy a gift, or gold jewelry for your wife or girlfriend if you're in Japan. You just still need to wait for a pullback. It simply means that it might rally less than the others. The gold might rally less against the yen against the others, but it should still go up because even though we are at equal legs from here, but the rally looks impulsive, and you do not have a complete five-wave move up from here as yet. Okay, so there is a question here. How can I see how much time an instrument takes to complete a cycle? Okay, I mean, obviously, as I mentioned earlier, the timing is the most difficult part of forecasting. If this, you can say that if this wave three, of course, this is the Fib extension tool. If this one took 55 quarters, right? Now, the 0.618 extension of the time that it took here will take you to this July 2021. 50% of the time taken by that leg, okay, will takes you to about I would say this April 2020, and the two legs will be equal in time in 2026. Okay, so if we do reach that area, then this leg will be equal in time to this one in 2026. But since we're looking for a 0.618 price extension here, so at least you'll be looking at July 2021. If you look at the pound, now this move here took 12 quarters, and you can see that pound has already taken more than 12 quarters. Okay, it's going to be 24 quarters soon, and it has not reached the equal legs area yet. We will have 24 quarters in January 2020. Okay, and of course, so you can get an idea of the fib time through the fib time extensions, but you can't just tell for sure that how long it's going to take for the pound to get here. All right, so you can look at the fib time extension just like we look at the price time extension as price extensions for fib price extensions. Similarly, you can look at the fib time extension, but you just can't know for sure how long a cycle is going to take to complete. And the next question is, yes, I just use the fib time extension tool to indicate that yes, that's how you can get an idea. Tian Wong. Okay. The next question is: Is it safe to buy or sell in a big consolidation in larger time frames and intraday time frames? Only if you can identify. We never actually like to trade in consolidations, but I do understand that if, let's say, you have uh, no part, we haven't covered that yet. We will be covering that in a few moments. All right. So you can trade in the consolidations only if, let's say, you have a big consolidation here, something like this. The market start going sideways. This is the weekly or the quarterly chart. Only if you see a clear 5 swings in complete sequence here on in smaller time frame, then you can, either it will do a B and a C, or it will do a 6 and a 7. Okay, so only if you see an incomplete sequence, then you can trade in the smaller time frames within the larger consolidation. We do need to have an incomplete sequence in that smaller or the midterm time frame that you're trying to trade. Otherwise, we do not trade. We only like to trade the extremes. That's the right side system. I shared the link also earlier. Okay, and we do not like to trade the retracement because they can often, of course, sometimes it can work, sometimes it cannot. That's more like gambling. So we like to trade the extremes, which 80 to 85% of the times, extremes are basically your blue boxes that do produce the reactions. All right. So, okay, that's another interesting question here about where is Eric? Well, Eric is in his office and is not conducting today's webinar. I'm conducting today's webinar. My name is Daud. All right. Okay. So next up, we're gonna cover the gold USD chart in a few moments. All right, guys. So that's the reason why I think that a better buy of gold is going to be against the other currencies because of what I just mentioned. But that doesn't mean that we won't be expecting more upside in gold against the yen because you have this rally is impulsive, and even if this is wave 5, you do not have a complete 5-wave move from here yet. Okay, so you should be expecting at least something like this to take place. Whether it gets to 21,389 or not remains to be seen, but minimum something like this you should be expected, all right. And remember, that's your 0.618 extension target. This is indeed a wave 5. Then your 5 equals 1 target is going to be around, okay, we already reached that. So then you will look at the inverse extensions of wave 4. That's you're reaching the inverse 1.236 extension at 16,000. No, I think it's 167,620. And then the one inverse 1.61 extension is 183,530 yen for 1 ounce of gold, all right. And of course it can extend beyond that as well. All right, so now next we're going to cover the gold versus the Aussie dollar. Okay, this one is, as I was pointing out, that Aussie has already, when it broke this peak over here, we have done many public blogs about this, that this dip in Aussie should be bought, and this one until it doesn't reach the target of 22.21. And now in this quarter it has reached the target of 22.21, which is basically nothing more than the 100% extension. So this is the only one actually which has so far reached the 100% extension since the 2008 low. Others haven't done it yet, as you can see. When we were looking at the other gold against other major currencies. So this one, uh, the count in this one is not so clear. I have to be, I have to tell you guys, because this rally itself looks like 3 waves, and then this one also can be counted as 3. So you can say that you're already at the extreme. If you want to make it a 5, you can go 1, 2, 3, make a triangle in 4, 5, and then you can say that, okay, this is my A, B, 1, 2, and then you can go 1, 2, and then ending 3, and it could do like a 4, 5, 4, 5, something like that can happen. Or it could be nesting as well, like we showed with the others. So it can do like a pullback and finish with 1 of 3 of C and then do a larger pullback before higher again. Okay, so this one is open to interpretation because since it already reached extreme here, and this is not like clearly impulsive. Of course, if you go like this, still your third swing is the shortest. If you try to make it a 5-wave move, considering this is coming from 0, so unless you make a triangle here, force that. So which is why this one is a little bit tricky if you want to count this as an impulse, to be honest. So it could be doing many things, but based on this is at equal legs from the 2008 low, but obviously if you start from the 0 line, it has not yet reached the 100% extension. So we will keep pushing for more upside until we do not reach 31, 18, 35, 53 area in the gold versus the Aussie dollar. All right, so that's the long-term view here of gold against the major currencies. Okay, now we're gonna take a quick look here at the silver cycles and the GCC commodity index before we check out what's happening with gold, and then do our projections and conclusions on that. Okay, so let's take a look now at the charts of silver. Just like I said, we will be trying to answer the question of whether gold USD should follow the break to new all-time highs that we have seen in gold against the other major currencies. Okay, so this is the 2011 peak, as you can see in silver, and silver it should be pretty evident by looking at this chart and this bottom half where you can see the trend line break, and then of course this is the price trend line break here. And remember, this is the same peak as gold, which we have broken in gold against many other major currencies, not against USD yet, obviously. Uh, So this, it should be pretty evident. Anybody who understands the channels and the trend lines, and has concept of some understanding of cycles, that this cycle should be over, regardless of whether you look at it through the trend line break in the price or in the RSI. Okay, that this bounce or the recovery that we're getting, it is not part of this cycle, which means this cycle has ended. Okay, and this pivot in the distribution system has given up, which will give us a target around 2141, 2607 in silver. Okay, now keep in mind that, let's say, assume that somebody says that, okay, this is not a 5-wave move, but I have seen many people labeling this as a 5-wave decline. Okay, yes, I already explained that at the beginning of the session, Edson. What the briefly I touched upon that. Remember, this is not a webinar about all things Elliott wave. It is mainly about gold, and the topic is predefined. We also have a limited time here, but I did touch upon the first and second dimension correlation at the beginning of the session. So if you joined late, you can listen to the recording and get an idea. Because if we just start going into all different directions, then we won't be able to finish the webinar. So I hope you do understand. All right. So I do request that we keep the questions related to the webinar only. Okay, and the things that we are discussing here. One could easily say that silver can, okay, that this is just the first leg. That obviously, if you go to the quarterly chart, okay, and if you take a look here, all right, one could say that this cycle ended from 1997 all-time lows, right? And this is just the first leg of the correction, and that silver can go here to this area, and it will drop from here. So as you know, that the concept of equality, that is seen in the markets all the time. Okay, especially in the corrective waves, they will look for equality target more often than not. So let's say silver goes here and then breaks this low, right? Number one, why we think that won't happen? Okay, all right. If you take a look here, this is the GCC Wisdom Tree Continuous Commodity Index Fund. This is the 2008 peak. This is the 2011 peak, right? This is the peak in gold, right? Gold versus the USD and against most other major currencies, as we saw. So this one is sitting at this blue box here. This is an extreme area. Just like I said that pound is reaching extreme from this low, right? Now the GCC Wisdom Tree Continuous Commodity Index Fund is sitting at the 100% extension of this red AB. So now you can see that it is in a bouncing area. Okay, so when this commodity index fund is sitting here at this 11-year long cycle, which is at an extreme, started in 2008 and the secondary peak was in 2011, right? So this one also has dropped from 37 to 17, right? So I mean, unless you think it can go to zero and all commodities will just get worthless, and you don't even have to pay zero. In fact, you get paid for buying them if they go in negative. So it wouldn't really make any sense for you to think that, okay, it's gonna go here and do the double correction, right? Plus this one is sitting at equal legs. So worst case, if you say that, all right, it is gonna get into like a larger bounce and get sideways consolidation, because this is three-wave move, right? So still you will expect this is an 11-year long cycle which is coming to an end, all right, still can make another short-term low. So that means that in price wise, you will look for a move back to at least this area, the 50, 61, 8 fib region, right? And should last a few years at least, because this is not like a 1 or 2 year long cycle. This is an 11-year long cycle, all right? So when that happens, when this one is saying that it's ready for a bounce, it doesn't make sense to look for silver to go here, finish three waves, and then decline here, because the silver, number one, this one is negating that because it's sitting at equal legs from here. And if silver did that, then we know that the next equal leg extension is going to take us below zero, which means that if it did go to the equality target, then you will be getting paid $15.33 to buy an ounce of silver. So it's like you're getting silver and you're getting dollars as well, so which is obviously unrealistic. It's not going to happen. So it cannot drop below zero, right? So that, of course, even if you look at the 0.618 extension target where sometimes truncations can happen, that's also in the negative territory. Okay, plus you combine this with the fact that the GCC index is sitting at equal legs here, so it should be getting ready for a rally anytime soon. May have started already, could still see another short-term low. Remember, gold, like I said, will pull back soon from these extreme areas that we've been highlighting, even when another high still can happen. Okay, so in the light of all this and what we have seen here, you know gold breaking to new all-time highs against most other major currencies, we believe that gold USD will also follow and go on to make a new all-time high. Okay, so because clearly it does not make any sense that when this one is sitting at equal legs, that you look for gold. Now we're going to move on to the next section, in which we will be taking a look here at the charts of gold versus the USD, and we will look at some trading opportunities as well. All right, so let's go there and take a look at these charts now. Okay, so this is gold versus US dollar. Remember, this is the 2011 peak that we have already seen breaking. Gold breaking that peak against most other major currencies, right? All right, so now this is 2015 low, same as this gold versus the pound, this low here. And as pound is at equal legs from there, you can see that gold USD is also in a blue box. It is at the 100% extension. We are labeling a running flat in wave 2. But if you go from extreme to extreme, I think if you go from like this, then the equal legs is 1490. Okay, reached already. And if you go from the actual low, not from the end of the running flat wave 2, then your equal legs was around 1448, and that's also been reached. Okay, so even if you use the actual low, which was this low here, and not this low, which we are labeling as the end of the running flat wave 2, still we have reached the blue box. So in both cases you have reached it already. Okay, so that is why you see gold kind of like stalling now. If you take a look here, so again this one as well. Now so when we look at gold, like I said, when you look at the GCC, you look at silver, that if it breaks the low, where the next targets are coming. So and then you combine that with the fact that uh, basically gold against other major currencies has broken to new all-time highs. So we believe that this three-wave move, you have to either label it as a nest, the way we are doing 1 2 1 and then 2 and then higher again, or 1 2 3 4 5 and then a larger pullback in wave 2 and higher again. So it has to be one or the other. Okay, this is our preferred view based on intermarket correlation. Okay, but as I said, since if I just remove the labels here for a second and go to the quarterly chart. Okay, so the rally here appears impulsive. Now, I do understand that gold does have room to do the double correction lower, and I'm sure you guys will agree, okay, that if we are reaching equal legs, the retracement in gold itself was to the 50% from here, but if you count from zero, then it didn't get to the 50 back. So you could say that, all right, gold can now end three waves here. It's at equal legs, okay. So it could do, let's say, something like this in ABC, and it can drop and do the double correction. All right, it is theoretically possible. Nothing is impossible in trading. But why we believe this is unlikely and why we're not favoring this view and not a double correction from here, for many reasons. Number one, the GCC Commodity Index Fund. This is the peak in gold. It is sitting at equal legs from the 2008 low. You have the silver chart, which does not have enough room to allow the double correction from this peak without going below zero. All right. And thirdly, then you go and take a look at the break to new all-time highs of gold against the most major currencies, namely the Japanese yen, British pound, euro, Canadian dollar, Aussie dollar. So you have gold making new all-time highs and breaking the 2011 peak against most major currencies, and that is when we saw this peak in gold in 2011. Okay, so you would obviously conclude that yes, even though the rally so far is in three waves, it does not make sense for to call a double correction from this 2011 peak, considering you have already broken this peak. You know, you've got a break of that peak in gold against most other major currencies. Your GCC Commodity Index Fund here is sitting at this extreme area. This is an 11-year long cycle which is coming to an end. And then you see that silver does not, even though gold doesn't break zero if it does the double correction from here, pretty obvious, but silver does not have enough room to allow you to do the double correction from here without going below zero and becoming worthless, or in fact you're getting paid for buying it. All right, so due to all that, we believe this is not the view, and hence why we believe this one is going to do this. Okay, and that is the reason why this is our conclusion, that the gold USD will end up following the break to new all-time highs in in the gold USD as well. Okay, can silver fall just below 9? Okay, on what grounds you are saying that, Paulina? Can you please explain? I mean, that's what I've been trying to say. Yeah, I know it can make a marginal new low and rally, but I'm talking about logic, okay? That why it doesn't make sense for it to do that, all right? Because this cycle has ended. This is a three-wave move. You have a commodity index fund, okay, which contains all commodities. It is sitting at the 100% extension since this 2008 peak. This is the peak in gold and silver, and it is gonna, from this blue box, I bet you that it is at least gonna do a three-wave bounce. I cannot tell you the exact level, how high that bounce will go, but that's what the blue boxes do. There is an 85 to 90%, 80 to 85% chance that you will see a minimum something like this happening from the blue box. That's those, those are the statistics for our blue boxes. Okay, so when this one is telling me this, it doesn't make sense for me to expect silver to break this low and go to $9. I mean, again, I asked you on what grounds or what is your logic for that. I haven't had an answer yet, but it doesn't make sense for me to at all to see the GCC sitting here, all right, seeing that the gold against most other majors has broken to new all-time highs, has broken the 2011 peak, to go and call this in silver. In the same way as gold, okay, again, unless I'm not following, uh, I really don't know what you mean by that, because if I overlay silver here, to finish what correction? That's what I'm explaining, that the cycle from 2011 peak has ended in both gold and silver. So this one already corrected here. This is the drop in gold. This is the drop in silver. And the cycle from 2011 peak has ended in both gold and silver. Gold has rallied more than silver. Okay. But that doesn't mean that, now silver has to go and make a new low. Okay. So again, I do not understand the logic still, that in the same way as gold, because yes, this is the drop in gold, this is the drop in silver, they both ended that cycle. And again, I do not understand what you're referring to, or on what grounds you're saying silver can go to 9. I don't say it is impossible. I'm talking about logic and what makes sense as for the data that we have today. That is what forecasting is all about. It is not about personal biases, or it is not about what I prefer or what I would like it to happen. It is about what makes sense given the data that I have. All right. I see. Okay. Are you talking about silver here? Okay, so you're saying that this is A in both and we are in a B wave now, and then it will drop here in C wave, they will both drop. That is what you're suggesting. Okay, so it seems that you have probably either just joined or you were not attentive for the last few minutes. That is precisely what I was explaining. That one can say that yes, it can happen. Okay, that they can do a double correction. This is just the first leg of the correction. Precisely, I spent the last 5 to 10 minutes talking about that. That why we believe that is unlikely. Okay, because if gold is already at your 50 to 61.8 fib area over here, okay, so that means if you're saying that gold is ending B wave, gold is not gonna do another cycle similar to the one from 2011 peak with the GCC sitting at the equal legs on the 2008 peak. This is one market concept. Things do not happen in isolation. So with the GCC sitting at the 100% extension down from 2008 peak, and this is the same peak in gold, okay. And as I said that, yes, another low can happen, but gold is not going to do another cycle similar to 2011 considering where the GCC is. So it just does not make any sense if somebody is making that forecast. Either they don't know what they're doing or they're just naive and then looking at everything in isolation, that this is an A and now C's lower is going to happen, and completely ignoring the fact that the GCC is sitting at the 100% extension. And even though gold has room to do double correction here, if it drops, it won't break zero, but silver does not have that kind of a room here. Okay, and when the next leg lower happens, it has to be ideally either go to equal legs, or if it's going to truncate, go to 0.618. And if it drops from the blue box, even your 0.618 comes below zero, and then it's not going to do another cycle similar to this one, or even gold similar to 2011 with the GCC where it is right now. And in addition, it does not make sense for gold to do three waves from 2011 peak against the USD when gold has already made new all-time highs against the most major currencies. So against the Japanese yen, against the pound dollar, against my bad British pound, against the euro, against the Canadian dollar, against the Aussie dollar. So it simply means that if somebody is still expecting gold to do a double correction, which I repeat, I don't say it's impossible, it is not logical. It is not the right forecast if somebody is still expecting that to happen. Even after all the explanation that I've given, it simply means that either there's a bias involved, or that the no attention was paid to what's been explained here. But considering that we've got a break to new all-time highs in gold against most major currencies, with the GCC sitting where it is right now, and silver telling us that it does not have that kind of a room to do the double correction, it simply does not make any logic at all to call for a double correction in gold, even though it is theoretically possible, not impossible, but it does not make any sense at all right, because it's very simple. If you take a look here from this 2015 low, what do you have in the gold versus the pound? You have three waves here, right? And you have three waves in the gold dollar from the 2015 low. They're both in a blue box, right? So what do you expect in the gold versus the pound here? It has an incomplete bullish sequence because it broke this high already. So what do you expect? It will pull back and continue higher, right? So how can we expect gold now to go and do this when there is already a bullish sequence in the gold pound? And how can we expect it to do this when this low in gold USD is the same as this low in gold pound, which already has a bullish sequence? Same with the euro. The low is not the same, but same concept here. And let's not forget about what the GCC Commodity Index Fund is telling us. All right. So based on all this, our conclusion is that the gold USD is going to hold these lows here and will continue higher. And we do not believe that it will go to break this low based on whatever I have explained today. All right. Now, this is the daily chart of gold. All right, guys. So now this is the daily chart of gold. Remember, we are already at the equal legs from this low, as I mentioned, and we are also at the equal legs from here. So which means that for a swing trade, it is not the right time to be buying gold. Now, Yes, Paulina, I already explained my logic for that, and thank you for understanding what I am saying. And I know I have already explained that the two paths in gold, that either it is a running flat in the middle, the way we are showing, or it is gonna be like this here. It's 1, 2, and you can go and label it like this: 1, 2, 3, 4, 5, and then it can make a larger pullback. So it does not make sense for me to label this as an ABC with the GCC sitting here. I repeat one more time, and then this is the same low in gold versus the pound, and it has already broken this high. This is the same peak in gold versus the dollar. So it does not make sense for me to be calling the gold or expecting the gold to do this, all right, when I know that the gold pound has already broken this peak. All right. So no, it's because that obviously if somebody doesn't understand and they keep pressing their point, I do have to make my point clear, and not give the impression that I'm just moving on without making the point clear. All right. So, and I'm sorry for getting a bit repetitive there, because that's the logic. And again, if somebody doesn't want to see it, I can't really help that, but that's our view there. And again, I've explained the logic as well for that. Okay, so we know that gold is already at the equal legs from here, and this is the daily chart of gold. We have reached equal legs from, or the 100% extension from this 2018 low as well. All right, now that means, you know, uh, can you trade gold at this stage? As I said, we're going to talk about some trading opportunities, so we are actually looking at that section now. Okay, so your next swing buying opportunity, in my opinion, will be this red wave 2 pullback. All right, when it happens. Okay, now in the midterm, if you go here, we remember the right side is up. There's a green right side tag, so we are not looking for any selling opportunities here. We're not looking to sell. This has the look of a flat in the middle. All right, and I will give you an area where we will be looking to buy gold if that area is reached. It might not reach it, it could truncate, but we will not be selling. But if this area is reached, we will put a blue box there for the members, and I'm going showing it to you here as part of the webinar. When once this low is broken, so then this is the area. If reached, this is where we will be looking to buy gold regardless of what it does next. So two things can happen from there. It can make this wave 5 up into end this red 1 and then make this pullback. Okay, so it can make a new high from here, and then if you guys are going to buy there, of course it's going to be against this level, and the target will be, the minimum target will be the inverse 1.236 Fibonacci extension of the wave 4 pullback, which you can work out only when you know for sure where the wave 4 has ended, right? And the worst case scenario is that the bounce from here will fail in 3 waves, and it can go down and extend lower and either do 7 swings in wave 4 or could even already have this red 1 in place. I can put it like this. Okay, so you play the hedging, which means that regardless of what happens next, minimum 3 wave bounce from here should take place. So if it gets there, we like the buying. We do not recommend like the selling. We do not like buying at current levels. It's in a no man's land right now, but this will be an extreme area if it breaks this low. Okay, over here it missed the extreme. Not every time it will be reached, remember that. So when we were here, the extreme was 1474.76. It missed it by about $10 or so. So sometimes truncations do happen. So now, like I said, this low came with divergence here. This rally is impulsive, so it has the look of a flat in the middle. And if it does now drop to this area, we expect to see buyers appearing in that blue box. And two things can happen from there. Either it goes to new highs, then you can look at the inverse 1.236 extension of this drop as the target, or minimum a 3 wave bounce can take place, and then we would like to use that to move or trail stops to break even, get into a risk-free position. So let's say it stops at right at equal legs, starts bouncing, then you look at the 50% retracement of this decline here, and when it reaches that, then you either trail your stop to break even, and if it goes to target, that's great. And if it turns lower again, the worst case is that you get stopped out at break even. All right, of course, sometimes the setups can fail about 10-15% of the times, which is why, of course, you always trade with the defined risk, fixed stop. That's what we do, and not never open the stops. All right, so that can be the next opportunity. In gold, if it gets there, we would like to be. We think the buyers will appear there. Minimum three-wave bounce should take place from there, and the next swing buying opportunity is going to be this one here, and of course against the other majors as well. And let me quickly remove the tools here, and now moving on to the last section. So we already know our conclusion that we do believe that the gold USD should follow based on whatever we discussed today, and we're going to quickly take a look at the price projections, eventually the very long term ones, if we do go on to break the 2011 peak as we have done against other major currencies. All right, so the equal legs from the 1999 low is going to take us to 27.27. That's going to be your long-term target. And if we do the projection from the zero line, it's not going to be much of a difference because maybe a couple of $100. All right, that can take us to 29.62. All right, so though that's going to be the target area there for the long-term price projection once this high is broken, okay, in gold. And now before we so that's pretty much it that that I wanted to explain. Now if anybody has any questions that they would like to ask, please let me know so I could go over the questions before we wrap it up and end the webinar. Okay, so I did get some general questions about how we can identify whether it's a wave 1 or a wave A. Okay, so you do need to look at the previous move, all right? Because, if your previous move was an impulse, then, and you finish 3-wave back, you get a 5-wave rally, then you need to label that as a 1, and the previous move was corrective, then you need to label that as an A. Yes, Prakash, we are definitely gonna post the recording. Uh, it will be posted at our website within the next 24 hours. It will be made available. We're gonna email a link as well once it is there. Thank you very much, Jack, for the feedback and the kind words. I really appreciate it. You're welcome, and thank you for attending. Okay. So indices selling is a no-no. I have a question about whether it is safe to buy gold and sell S&P 500. So we at EWF believe that indices, they have the right side is up even when, again, like I said, this webinar is not about S&P, but everything said and done, still we do not like selling the indices, and I would buy dips in gold at extreme blue box areas than selling S&P any day. Okay, does not mean that you start buying it in the middle. Okay, now I got a few questions here. I'm going to take them one by one. So please, I will appreciate your patience. Just bear with me. The time projection here, again, you don't know for sure, but you could get some idea here by taking a look at this. It took 745 quarters here in this move from here to here. Okay, so the 61.8, we are now at the 61.8% extension of that. All right, but if we do this, we are sorry, we're not even at the 38.2% of that yet. uh, from here we are, but from this secondary low we are not. So if it's going to take half the time that it took in that leg, you're looking at 2022. 0.600 extension is in 2024, and the two legs will be equal in time in 2029. Okay, this leg will be equal in time to this one in 2029. Okay, so again, it could happen sooner or later, but that's just to give you an idea based on the fib price extensions. Okay guys, so next question here is, okay, I've already answered the one about gold and S&P recording. We will be posting it. Okay, I got it. Is to it good to buy bullions now for long term? Thanks, Tian. As I mentioned earlier, that in an uptrend you look to buy the dips. So even if you do want to do a long term investment, you should remember that you are sitting at equal legs in the blue box from this 2015 low, so you need to wait for a pullback here, a sizable pullback in order to buy, and same with the other currencies instead of just jumping in at this stage. Of course, if you don't mind buying and forgetting about it, okay, that's a different scenario. All right, like I said, everybody has their own strategy, but what would make sense is that to have some sort of an edge. You are at this equal legs. Yes, it can extend, but it would make sense that you wait for a pullback to buy. All right. Could it be that silver is doing wave two, because if XAU will do the double, silver may drop to high 16s? Thank you very much for the webinar. Please say something about DAX and Dow Jones next time. Okay, guys, just bear with me. I'm taking them all one by one. Okay, so the question is it possible that the silver is doing wave two if the silver may drop to high 16s? Let's take a look at the silver chart here. Okay, so there is nothing wrong with silver dropping to high 16s. Silver has the same setup here in the middle. It has the look of a flat, so silver can also do a double correction here. And this decline so far is in 3 waves. If it makes another low, it's going to become 5 waves here, and that will then mean that this path will become more likely. This path that we are showing in gold, and this one could then drop to 1685, like you said, high 16s, 1564 area, and should see buying reaction from their minimum in 3 waves. All right, now you're most welcome, Paulina. And could you please say something about DAX and Dow Jones next time? If yes, when would that be possible? I cannot say for sure, what's going to be the topic for our next free webinar. As you know, we try to do one a month or from time to time. That obviously has to be decided between the team. Referring to the DAX, we did do a chart of the day on the DAX. It should be available at our website. It did mention or show the short-term wave count. Okay, so you can take a look at that by going in over here. Let me just share the link with you guys. So if you go here, you scroll down, you will be able to find the recent chart of the day posts that we have done showing the short-term counts in probably, I think we have done it for both those indices, but regarding the long-term views, again, I cannot say for sure whether it's not impossible, but I cannot say for sure whether the next one would be based on those indices or not. Like I said, it's the topic is decided between the team, and I just cannot make a call on that as of today. Okay, please share long-term projection of silver like shown for gold. Okay, so upon your request, let's see, we have the chart here. So the long-term target for gold starting from this 1997 low, eventually the equal legs target is 59.29, and going from the zero line, it is going to be slightly higher, coming at 63, provided this low keeps on holding, of course. All right. Is it safe to buy retracement of wave 2 without a candlestick confirmation? Well, to be honest, we do not like to buy retracements, Edson, anyway, and candlestick is something that we do not use at all. So even with the candlestick confirmation, we do not like to buy retracements. For example, let's say gold here, you know, uh, at one stage, we always take the more aggressive view. So let's say if we call wave 4 completed here, we wouldn't, and we did at one stage, but we didn't tell our members to buy this wave 2 pullback. We were calling it 1, because we were aware that this low came with divergence and this flat is a possibility, but based on intermarket correlation, we took the more aggressive view, but still we did not tell our members to buy this wave 2 pullback, because that's buying a retracement is always risky, and we know it can be a flat, it can drop here. So even with the candlestick confirmation, which by the way we do not use, we do not like to buy the retracements. We only like to trade extreme areas. It's a much safer option. So if gold drops to this area, we would definitely like to be a buyer there. Either it can make a new high or put in a three-wave bounce that we will use to allow us to get into a risk-free position. All right, you're most welcome, Nitin. Thank you for attending. Thanks, Tian. Again, it's my pleasure. Thanks for joining. Okay, so a couple of questions here. Please do next webinar again. Yes, somebody, we will, like I said, another webinar will be scheduled for some time towards the end of next month. I don't know who will be conducting it. Most likely it's going to be Hendra doing it. I think it's his turn. Thank you very much, Prakash, for your feedback. I appreciate it, the kind words. And another question is why we don't use candlestick patterns, and if possible, also add KSE 100 index from Pakistan in Elliott Wave forecast so we can subscribe. So we do not have any analysis of the market. Please consider my request. I know, however, cannot find any other way to give my request. Thank you so much for your precious time and give us the analysis. Okay. Yeah, I think that next question, sorry, it was from Rose. Yes, Rose, uh, I will pass on the request to the technical team. Remember, all the decisions that we take, and they're not taken by one person, so we do make consultations, but certainly it is something that we will definitely, I will pass on the request and then see what the decision is. But thank you for showing interest and bringing it to my attention. If you do have any suggestions or questions or comments, you can always send us an email here to this address, and you can also contact us using this green chat now button over here. Okay, so if you go to our website homepage, you click on the green chat now button, you will be connected to support representative. Of course, they are not technical analysts, but they can answer questions about general questions about the service, if the subscriptions and different things like that. And if you have any suggestions, also you can pass it on to them as well. So you do not need to wait for the next free webinar, to do that. That's the reason why I'm mentioning. But I do appreciate it. Thank you very much for attending. You're most welcome. You're welcome, Lucas. You're welcome, Greg. And another question here, a bit generalized one. This is the last one that I will be taking out of the general questions. Can Wave 2 only retrace 14.6%? No, it does it. That's not the only fib ratio that it can look at. In fact, that's pretty shallow for a Wave 2. I will recommend checking out this page here. For the different structures, the basics, the rules and the guidelines and stuff, for those who, if you are not aware of it. Okay, and I lost my questions tab. Now it's here. All right, guys. So please read that. And thank you, Darren. You're most welcome. Thank you for joining. And why we don't use candlesticks, Neville? Because we do not. We just use, we look at the structure, the sequences, the cycles, the correlation, and we believe that the candlesticks, they do not really tell you much. I know people trade on the basis of that. We don't even use indicators except for let's say RSI or the stochastics RSI, okay, or CCI index, which goes into our distribution system. But that also we do not use them for buying or selling, or if to see if the market is oversold or overbought. We actually look at it to determine whether it's a 5-wave move or not, because it needs to come with divergence, or if it's a corrective sequence, it needs to come without momentum divergence, and so on. So we use to check momentum, we use the RSI, but not to make a buying or selling decision. That is done solely on the basis of the right side system in our blue boxes in the direction of the right side. All right. So that's the reason why we do not use candlesticks, because again, we don't see any benefit of using those. All right. So in the end, again, thank you once again, everybody, for joining us. And for those of you, I know there must have been a lot of members here. For those of you, who are non-members, if you like the webinar, and remember, we update. If you go here, right? So we do cover gold, silver, crude oil, copper, palladium, natural gas, and more commodities, including grains, on a regular basis in our members area. And also number of instruments, all of them, they are listed here, 78 in total, including forex, commodities, indices, stocks, ETFs, and Bitcoin. So if you haven't already been a member in the past or have tried us, feel free to sign up for a free 14-day trial. Or even better, we have for new members a very good promotion at the moment, where we are offering 2 months for the price of one. So basically, you pay for 1 month and you get 1 month free, 1 month free before you start paying monthly. So you can see the banner here. Just click on it, and then you go to the landing page. Okay, and then you just pick the plan you need. You can see a comparison of all the plans here by clicking on the subscriptions link. You can see what's included in each plan. And we have like 3 different groups. So let's say you want the gold plan, you click on it, it will give you the option of group 1, group 2, group 3. Group 1 has forex, indices, and commodities. Group 2 also has forex, indices, and commodities, but different ones. And group 3 stocks and ETFs plus the Bitcoin. So you can select, choose your group, click select group, and then you can go to the checkout page. So I mean, again, like I said, it's a great offer. If you like the work and if you would like to join us, this is a great time to do it, because you will pay for 1 month and get 1 month free. Okay, yes, Tian, we do trade forex, and we do cover a lot of forex instruments, and you can see them over here. These are all the forex instruments that we cover. There is about I think there's about 27 in total, 26. One is a 10-year note, which is a bond. There are about 26 forex instruments that we cover, if you count the dollar index also as a forex instrument. All right. So we do cover a range of markets, from forex, commodities, indices, stocks, ETFs, and also Bitcoin. So again, thank you once again for joining me. I hope you guys enjoyed the webinar. You take care of yourself. Enjoy the rest of your day, or have a great evening. And the recording will be posted within the next 24 hours at our website, and we will email a link as well over the coming days to those of you who attended. But if you do not want to wait for the link, you can simply return to our website within the next 24 hours, 24 to 36 hours, and then you will be able to see the recording there at our homepage. It will be posted over here. If you go to the home page, so you see all these where it says latest videos, so it will appear over here when the recording is available, so you can keep checking that section, but give it about 12 to 24 hours at least, and then it should be ready. All right, thank you, take care, and we'll until next time, take care everyone.